Hi everybody, welcome back to Ox Talks. It is Tuesday, December 5th, 2023. Hope you're all having a good day. My day's been really busy so far. Started off early this morning with a court appearance, lasted about an hour on a matter. Actually obtained an order for entry of almost a $1.5 million judgment for a real estate developer client of mine on a arbitration that we won. And I'll tell you about the story at the end of the video today about me being unable to submit this proposed judgment today to the court for filing a bit of a system down situation that affected me and my client today. So stay tuned to the end if you want to hear about that. That has to do more with the law practice. Then I had a call with an arbitrator on another matter. Lasted about an hour, some out of the office errands, and back here trying to get something uploaded this afternoon for all of you because I came across several articles that contain newsworthy, from my perspective, newsworthy events and things that we all need to be paying attention to. This is going to be a hard landing. There is no doubt about it from my perspective. I appreciate all of you being here, watching these videos, listening to what I'm saying, and most importantly, obviously subscribing, liking, sharing these videos with your family, friends, colleagues, and co-workers. We've discussed this before now. You can't save everybody. There are certain segment of people that just don't want to see what's happening. They would rather live with their head in the sand, pretending that nothing bad's ever going to happen. And for a lot of those people, it may be too late for them. So obviously focus on the ones that are like-minded as you, or the ones that appear to at least be open-minded to listening to what is happening and opening their eyes. So let me start with the first article. This is about Wells Fargo Bank. And it's out of CNBC today. It says Wells Fargo CEO warns of severance costs of nearly $1 billion in the fourth quarter as layoffs loom. It says Wells Fargo CEO Charlie Scharf said Tuesday that low staff turnover means the company will likely book a large severance expense in the fourth quarter. It says, quote, or he said, quote, "We have seen turnover come down, and so because of that, we're likely going to have some more severance than we otherwise would have anticipated," Scharf said during a Goldman Sachs conference. They always wordsmith these things. Well, what that means when he talks about we've seen turnover come down, meaning not as many people are quitting their jobs. So what are they going to do? They're going to force them out the door. They're going to fire them. That's what that means. It says we're looking at something like $750 million to a little less than $1 billion of severance in the fourth quarter that we weren't anticipating, just because we want to continue to focus on efficiency, he says. Again, what does focus on efficiency means? It means trimming the staff, cutting the head count, firing people, laying people off. That's what that means. That's what efficiency is regarding here. It says the expense is an accrual for worker layoffs and relocations that Wells Fargo expects to make next year, according to a spokesperson for the bank. So these are going to be people that are going to be losing their jobs in 2024 Wells Fargo employees. It doesn't, of course, the article doesn't go on to say how many jobs are going to be cut. They don't want to send panic throughout the marketplace. They certainly don't want to say anything that would cause the price of their stock to fall for their investors and their shareholders. So we don't know how many people Wells Fargo is going to be laying off next year, but what we do know is it's enough people to trigger them incurring close to $1 billion of severance financing or monies to cover severance costs for these people. So that is going to be substantial. Again, we've been hearing about massive layoffs in every industry across the board. It's only going to get worse. And as it relates to the banking sector as a whole, the banking sector is on very shaky ground, in my opinion. So more to come. I'll keep you updated on that story as well. This one's from the Business Insider. It says today, prepare for the S&P 500 to plunge 23% by mid-2024 and the U.S. economy to sink into recession. This is J.P. Morgan's top charts guru says. It says, prepare for the S&P 500 to crash 23% by next summer and a recession to take hold. J.P. Morgan's guru has warned the stock market is mistakenly pricing in a soft landing for the U.S. economy, where the Federal Reserve succeeds in crushing inflation without causing a recession. Jason Hunter told CNBC's Squawk Box on, this is actually yesterday. But investors will soon realize, he says, the outlook is darker than they thought, sparking a sell-off in stocks, the bank's head of technical strategy says. He says, quote, you tend to find your way into a bear market that eventually associated with a recession way more often than not, Hunter said, pointing to the currently inverted yield curve as a reliable indicator of economic pain. He says the odds are stacked in favor of a hard landing. So there you have it. So he says the article says the Fed has hiked interest rates from nearly zero last spring, 0% to north of 5% in a bid to curb historic inflation. Many stock investors are betting the U.S. central bank will cut rates next year, boosting asset prices and stimulating growth. And look, from my perspective, that is why you've had the stock market continue to rally higher. It is based upon the hopium that the Fed is going to start cutting rates. Quote says, however, they may be too optimistic as the Fed is unlikely to loosen its monetary policy until the economy cools. We're going to have to go to stall speed, Hunter said. That's what enables the Fed to start easing in the second half of the year. If you look back at history, the Fed never cuts rates until the economy is literally in free fall, and then it steps in. So this is exactly what this gentleman is laying out here. It says the benchmark S&P index is likely to slump to $3,500 by the middle of next year in a retest of the lows of 2022. It says that the algorithms are already flashing red, suggesting investors should pair their stock positions and start to hedge. And look, even for those of us that aren't, or for those of all that aren't in the market, whether you are, this applies to you, because if the stock markets start to precipitously fall, there are reverberating effects through the economy. People start to sell other assets to cover their shorts, to cover their losses, to cover their margin calls, and this impacts all of us. So, again, that is a dire warning from a lead analyst. Let's heed the warning. The last story I'll share with you before telling you about my little event today with the law practice is from Market Watch. Came out today. It says America's CarMart Inc. stock tumbled 17% Tuesday and weighed on rivals after the used car retailer swung to a surprise fiscal quarter loss and posted revenue that lagged estimates. It says the Arkansas-based company, stock symbol CRMT, which describes itself as a buy here, pay here dealership, targets subprime or more credit-challenged customers who are still struggling with higher prices for essentials, meaning that they are lending to people that have crappy credit. It says the persistent inflationary environment impacted existing customers, which was evident in our credit losses, Chief Executive Doug Campbell said in a statement. Quote, this required an increase in the allowance for credit losses, which subsequently impacted the bottom line for the quarter. And I guess my thought is, what do you think is going to happen when you lend money to people that don't pay their bills? When you lend money to people that shouldn't be acquiring and don't have no business trying to acquire those vehicles in the first place. It says net charge-offs The debt owed to a company that is unlikely to be recovered as a percentage of average finance receivables rose to 7.2% compared to 5.8% the same time last year. And the article concludes by saying, the overall macro environment remains challenging for CarMart's core customers, both existing and prospective, but they need the service we provide, he told analysts, according to a FactSet transcript. So what that means is the people that are already in horrible financial shape, have horrible credit, are going to continue to slide and get into worse financial shape and have worse credit. It says other car retailers and lenders' stocks also fell Tuesday. CarMax was down 5%. Carvana was down 5.5%. Ally Financial was down 0.1%. And AutoNation was down 3.3%. So keep an eye on this. We all know what happened with subprime borrowers in the mortgage industry in 2006, 7, and 8. This never ends well. All right, lastly, my law practice. Lawyers in the state of California, and definitely in my county where I practice, we are no longer able to simply go down to the courthouse and file documents. I can't walk in my local courthouse with a lawsuit or a motion and go up to the clerk window like I used to for many, many years and file something. We have to now scan and submit any court filings through an intermediary called One Legal. And what One Legal does is they accept the documents and they're a processor that then forwards everything to the court clerk. The court files the documents electronically, and then you get a confirmation of the filing back through One Legal. And of course, One Legal takes a fee for every single document that it processes. So interestingly enough, parties that are representing themselves that don't have lawyers are still able to go to the courthouse, walk through and file documents, but the lawyers can't do it. So we're stuck. We have to use, it's mandatory that we use either a One Legal platform or some other competing platform as an intermediary to submit any documents in any case that we need to file. So I mentioned at the beginning part of the video today, I was on a court matter today this morning, obtained a judgment for a client of almost $1.5 million on a real estate issue. And I needed to submit a proposed judgment to the court so that judgment could be entered pursuant to the order of the court this morning. I tried to do that today, and my online filing service was down, and it could not process any documents I was trying to submit to the court. I called the customer service number, and a lady on the other end said, oh yes, we're having a system-wide problem. It's affecting many counties, one of which is your county. All I can tell you is keep trying. I said, well, what does that mean, keep trying? When do you expect to have the system back up? It's obviously a time-sensitive document, and the lady could not give me any information. She said they don't know. They're working on the problem. So here's a situation where I needed to get a document submitted. I was asked to submit it by the judge. It's time sensitive to the extent that we need to get this entered so we can pursue the next step in the matter. But in law, like in many professions, especially in law, deadlines are extremely important. If you have a statute of limitations about to run, what if that was a lawsuit that I needed to get in to file? It was the last day that it could be filed, or otherwise it would be time barred. That wasn't my situation, but had it been a motion that I was opposing, that there was a deadline to oppose the motion today, it wouldn't have been successful in being filed in a timely manner. And there's no guess as to what the court would have done in that situation, whether there would have been an excuse for that late filing or not. So it just goes to show, across all other spectrums, when you're limited to a system, when you're limited to an online platform, whether it be banking or in this case, my professional filing platform, when it goes down, it can reverberate into and create a much larger problem. And how about for lawyers, again, that were trying to file something today that couldn't file it because the system was down, it was a deadline. Then they have to deal with their client. And they have to explain to the client why something wasn't submitted. So it's just a just a story that I encountered today that I wanted to share with all of you that related to my law practice, a frustration, obviously. I still haven't yet been able to upload and file this document today. I will keep you posted. I'm assuming that they'll get this thing up and running and it will be able to file. But again, it's just funneling everybody into a controlled mechanism where you can do all the right things and you still end up not being successful and having a real problem. So that being said, we're right at 15 minutes today. Hope you enjoyed the content. I'll be going to get my workout here in a couple of hours. Please, all of you, do the same. Get your steps in today. Do some walking, do some push-ups and sit-ups. Strength training is really important as we talk about. The water intake is crucial. And with that being said, let's keep a watch on this continued collapse. I'll be back tomorrow with more hard landing news, I am sure. Have a good night. Bye.